Netflix, meantime, the shares are at session lows here after reporting earnings moments ago. It was a narrow earnings beat, but the guidance coming in light of estimates. With us now to discuss is Matthew Dolgin, senior equity analyst at Morningstar Research Services. Matthew, great to have you with us. Your first take on the numbers.
Well, as you said, the fourth quarter was good. It was fine, but guidance is the problem. It looked like revenue is probably in the range of what consensus was expecting, but margins are a little bit light and free cash flow is a little bit light.
Now, I was going to say, Matthew, it seems to me that clearly investors, when they were in Netflix before the effort to buy Warner Brothers Discovery, were really enamored of just, how clean this story was, right? It was just very much a kind of long-term growth story. They have pricing power. They're going to layer in ads, and buying another big asset just changes that equation to some degree. To what degree do you think that's the overhang, or are we talking about a little bit more maturity showing up in the growth numbers?
Well, I think it's both. It does seem, and the stock has sold off quite a bit since the deal was announced, and so it seems the market does not like that. However, we have thought that this is a maturing story that is going to have a really difficult time keeping up the growth that the market has gotten accustomed to. And so with or without it, we've kind of thought the stock is overvalued. Still at this level, we think it is, although it's getting much closer to fair in our view. But it seemed to be an acknowledgement maybe that this organic high rate of growth was going to be bound to slow. And so I think we're seeing that, and that will be the case if Netflix doesn't end up acquiring Warner. On the other hand, if it does, it seems to us like it's paying a lot for that growth, and that to us might be a little bit value destructive also. So either way for us, I think the move in the stock has made sense.
Do you think investors should sort of take this quarter with a grain of salt, Matthew, in that Netflix doesn't want to present a very strong front, particularly if a deal could, attract some regulatory scrutiny? You don't want to be seen as the dominant force in this industry. They've got to sort of walk the line here.
It doesn't seem to me that neither the guidance nor the results really is going to have any impact on how regulators look at this deal. Netflix did announce how many global subscribers they have now, just over 325 million at this point. Either way, we knew it was a lot. It doesn't change things at the margins that Netflix is the dominant player. And that's the thing. It's a dominant player either way. Even if these numbers are a little bit light and lighter than what the street would have liked, it is still growing at a good rate, well ahead of all of its peers in terms of its size. And so to us, this does not change the regulatory view at all. And I wouldn't think that Netflix is dampening the numbers in order to make that look better to regulators.